Hey, what's up, guys? Thanks for tuning in. Hey, want to create this video. Had quite a few, quite a roller coaster of emotions and events happen over the last couple of days, and I want to talk about them because I learned a lot, and I thought it'd be some value to you for me to share it, or at least to the three people that watched my video last time. So let's see if we can get a fourth here. Was that 33% growth in viewership? So anyway. Over the last week, and this is regarding the crypto market, of course, over the last week, saw more and more evidence that we would see at least one more big crash before the market starts going parabolic till we start seeing really nice gains here. And the evidence was sure enough to me that I decided to follow that. So what I did, and this was I want to say 2 days ago, so 48 hours ago, I started liquidating some positions. Now, the way that the crypto market works, if you don't know, is that really you have Bitcoin and then the entire market follows it. So if Bitcoin goes up, the market tends to do very well. If Bitcoin crashes, then the market also crashes in kind, and usually exponentially. So for instance, you have Bitcoin, it crashes $100. I wouldn't say that's a crash, but if it goes down $100 and then you have Litecoin, it will go down $400. And of course, it's not exactly like that, but just a general rule of thumb here. So I had quite a bit of Litecoin and a few other positions. I did have some Bitcoin, and I liquidated 100% of that. But that represented maybe 12, 13% of my entire portfolio. Now, at the time, Bitcoin was hovering around $42,000, $43,000, and it was expected that if this crash did come, the market would ultimately go down to what a week or two ago was an unbelievable 38,000, 39,000. Well, that is what I expected. That's what I planned for. So I liquidated those positions and I put them in something called stablecoin. If you're not familiar, it's crypto that's tied to the value of the dollar, so it's not fluctuating with that. It's safe. And then the market corrects, does what it's going to do, and then I redeploy those funds from there. So anyway, I'm all set with that. Next day passes, and it was a very slow news day. So this was 2 days ago. Very slow news day, and it really felt like something was in the air. Previous to that, there was such volatility. It seems like every single day something was happening. Elon Musk was tweeting about Dogecoin and how much he hates Bitcoin and all of this, but just such a slow news day. And negative news and FUD, fear, uncertainty, and doubt news was accumulating in the market. Everything from the negative energy implications of Bitcoin to China banning Bitcoin for the umpteenth time to just negative FUD all over the place. And that night, I went out with a friend for drinks, and we're sitting there, and I just really feel something's going to happen in the market, and it really started to, because if you look at the graph, it was just kind of fluctuating up and down a little bit. Anyway, I'm going on. Anyway, the market corrects, and it waterfalls and basically gets down very quickly to those levels that I expected, the 39, 30, 38,000 from 42. It was kind of a shocking thing to see at the time. So at the time, I felt really good about my decisions. So unfortunately, my phone died, so I couldn't actually make any decisions at that time, and that's probably for the best. But by the time I got home and my phone was charged up again, I took a look at the market, and it looked like it had dipped to that level that I thought, and the market actually was starting to recover a little bit, and prices were really low. I was looking at ADA for under $1.75. It had gotten to a high of $250. Ethereum was under $3,000. It had gotten to a high of over 4,300. Just not so long ago. So I was looking at these prices, and just like I trusted my gut on liquidating those positions, pretty sure there was going to be a correction here. My gut was telling me that there would be another wave, there would be something else that would happen, and but I second guessed myself, and I dove back into the market. I bought ADA at great prices. I bought Ethereum at great prices, and I felt pretty sure of it. And the market had dipped pretty much to that lowest support level that could be expected based on everything I was watching. Well, went to bed that night feeling pretty good about my decision, feeling really good that I had liquidated in the first place. Woke up 5 hours later, get on my phone just to see, okay, what was the response from this? And as you probably know, this was headline news like seemingly everywhere. The market took a dive. Bitcoin bounced off of 30 grand, and I could have picked up ADA at $1.05 at one point. I watched this happening live. I watched the value of my portfolio going from a very profitable position to effectively in the red pretty decently, uncomfortably, in one session, just watching it, 10, 9, 8, 7, 6, 5, 4, all the money just completely disappeared. And I knew this was temporary. I wasn't tempted to sell or anything like that, but really just shocking. Could have gotten ADA at $1.05, Ethereum at under $2,000. And effectively something like $400 billion exited and then re-entered the market a couple hours later. Lots of other videos talking about what actually happens here, and it's interesting stuff. But clearly a coordinated, coordinated attack, coordinated rug pulling is what I would call it. But again, why I created this video? We're 6 minutes in. If you're still with me, probably one of these 3 people actually knows me. I want to talk about what I learned from this, and I think it's very important. It's important for me. It's important for me to share it. So, first of all, don't panic or make impulsive decisions. A lot of people saw the market slipping. They didn't know what was going on, and that's fine. There's so many factors that influence this market, but didn't know what was going on, and they pulled their funds. And I gotta tell you, if there's one common theme that I hear from other YouTube influencers, people involved in the crypto space, it's that you tend to regret it more when you sell. You don't always depend. If you have a good asset, you don't really regret it holding it for the long term, even if it loses value in the short. Know what you're investing in. So one of the reasons I feel so confident is I'm invested in very strong plays. I really know what I'm invested in. I know they're going to be around for the long term. So worst case scenario, I find myself in a non-permanent, illiquid position that could last a year, 2, 3 years, but ultimately will come back exponentially. And that's fine as a worst case scenario. It's not preferable, but it's fine as a worst case scenario. Use minimal or no leverage. One of the reasons why this waterfall was able to cascade so much was because of all the leverage in the system. Billions of dollars were immediately liquidated from those that were going long on Bitcoin and other assets. Now I might be in the minority here. I prefer to use no leverage. I don't want to think about it. I don't want the potential of a margin call. No leverage, whether it comes to stocks, crypto, nothing for me. But if you are, don't leverage, more than you're comfortable completely losing, because it's just so much easier to get wiped out, and these markets are ultimately unpredictable. Don't invest more than you are comfortable losing. It's arguable that maybe I have, because I did feel very uncomfortable. That said, who wouldn't watch effectively a third of your portfolio just be lopped off within an hour? Coming back, that's great, but it was not very comfortable. And then I did go into a losing position, which did not like that. But again, if all of my positions become bearish, so if the crypto goes into a bear market, then I'm okay with just sitting on what I have. I really believe in everything that I have. I don't think that there's anything that I have that will not be around in 3, 4, 5, 10 years. In some cases, I think that it's going to completely reshape our world. And because I have that conviction and I've done the research, I'm comfortable with it. I have not invested in Dogecoin or Shiba or any of the other dog coins. But earlier in my journey here, I did invest in a couple of assets that were short-lived that I really didn't know much about, and I did lose a little bit of money on those because I had no conviction, and I pulled. And I'm actually glad that I pulled in retrospect, but at the time I did lose some money because I did not have the conviction or the knowledge of what I invested in. This also goes into how you learn lessons. So I like the idea of learning from other people's mistakes, but there's no comparison for learning from your own mistakes. I gotta tell you, if you make a mistake, money is tied to it, and really feel that loss intrinsically, you will think about that. You will not make that mistake again. It will guide your future. You'll make better decisions in the future. And that's it. So making your own mistakes is totally fine. I've made a few mistakes in my journey so far, and you know what? Better for it. Better for it. Trust your gut. So I liquidated the positions initially because I trusted my gut. I just knew it. Everything looked like it was doing pretty well. Bitcoin was just kind of being boring, and all of the other mid and micro caps were really doing pretty well. But I just knew something was up based on the information that I saw. So I'd rather go with my gut and be wrong at this time than go against it and be right. It's kind of like playing poker. You know, there's the right strategy for different hands. You're not going to win every time because you can't control everything. But the gut's really a metaphor for our subconscious, and our subconscious is informed by knowledge and experience of life. And it might not always be correct, but I believe it will win out more than not. And from this, I'm learning to trust my gut more. And it's okay if I'm wrong. Last, have a plan or plan to fail. Totally cliche, it's totally true. When it comes to investments, what is your exit strategy? Now, if there's not an exit, that's totally fine. Buy and hold is totally great, and a lot of Bitcoin maximalists feel that way, and that's great. But that does beg the question, what are your expectations of the current market and the market cycle? So if by the end of the year you expect values to be less than they currently are, then why would you start investing now if you're planning on just holding long term? If you're not trading and you're not planning on liquidating anything before you start seeing an increase in values. Really, the plan for that is invest in the next bear market when values are super low, and then wait until those get inflated. And of course, invest in solid assets that you believe in. But with crypto, if you have the funds now you really want to put to work and get a yield, buy some stablecoin. With crypto, you can get 10%, in some cases greater APR. So put it in that account, and when the time comes, start investing after this bull market. Midway through a bull market is not the time to start buy and hold for the long term, because more than likely than not, values will go below where they currently are, in some cases by a really significant amount. Anyway, so I wanted to talk about this stuff. This is on my mind, and I hope it provides value to the 3 or maybe 4 of you. If you got to this point, I appreciate you all, and thanks for tuning in. See you next time.